Welcome back to Alpha Recap. We're recapping the market action from today, the day after the close, and, as always, if you have questions, you can reach us at stockalpha.ai. Ready to dive in?
Definitely. Good to be here.
Quick headline to start. The S&P 500 closed up about 0.75%. The Nasdaq 100 surged roughly 1.25%, and the Russell 2000 actually finished down about 0.5%. That split, big tech plus energy versus lagging small caps, really set the tone today. So, what really stands out here is that we had a pretty concentrated risk-on move. Large cap technology and semiconductors led, energy popped on an LNG shock, and small caps lagged. Drew, walk us through why that matters.
When you step back and look at this, the divergence tells you about positioning and perceived macro risk. Traders rotated into what they see as safe growth, balance sheet-rich megacaps, and into commodity-exposed energy names, while avoiding cyclically sensitive small-cap names. That kind of split suggests some caution about economic demand, even within a risk-on day.
Right. And the other thing is the energy move added a little inflation flavor to today's tape.
Exactly. Reports of constraints in the liquefied natural gas complex tighten balances, and that bid in energy can push headline inflation expectations up, at least in the near term. Markets did move yields a touch higher on that.
Let's break this into parts. First, technology. It was the clear winner. Broadcom had a product announcement, an in-flight encryption solution for infotainment and AV platforms, and Lam Research highlighted stronger demand tied to rising wafer complexity. How did those headlines translate into the tape?
Product and structural stories matter in chips. Broadcom's announcement signals higher margin, embedded revenue for hardware vendors, and Lam's message about wafer complexity supports continued CapEx for advanced equipment. When you get both company-specific catalysts and a broader demand narrative, the hardware and chip equipment groups pick up momentum, and that lifted the large-cap tech complex today.
So it wasn't just one name rallying. A theme did the heavy lifting.
Yeah, that tracks.
Moving sectors. Energy had a strong day because of that LNG story. Give listeners a plain English explanation of why an LNG squeeze can ripple across markets.
Sure, if physical supply in natural gas or LNG tightens, futures and forward curves can move up. Higher commodity prices can lift energy producers and midstream companies, but they also raise the probability of higher headline inflation, at least in the short run. That can push real yields up, which matters for rate-sensitive sectors and for the Fed's messaging.
And that's what we saw. Energy names rallied. Utilities and some renewables also showed positive momentum. And even real estate pockets tied to logistics and data centers did okay.
Right. Utilities often benefit when investors look for yields or stable cash flows in a choppy environment. And renewables can get a tailwind if energy prices make contracted generation more valuable. But remember, the narrative was still concentrated. Big tech and energy accounted for most of the upside.
Okay, quick reactions break. Short ones. Go. Right.
Yeah, that tracks.
Nice. Now, the flip side, media and select health names underperformed. Netflix slid despite what many analysts called a solid report. What was going on there?
This felt like a classic sell the news moment. Even when underlying metrics were described as solid, the stock slipped because investors rotated out of media into semiconductors and energy. Valuation re-rating pressures and narrow leadership can make even decent earnings get punished if the market's repositioning.
Not a great day for some of those names.
Honestly, I was a bit surprised by this one.
Royalty Pharma and Evercore also pulled back on mixed reactions, so select standalones weighed on breadth. Let's talk breadth. Why does narrow breadth matter to traders?
When a few megacaps account for most of the gain, headline indices can look better than market participation actually was. That's a risk, because if macro data turns or sentiment shifts, the narrow leaders can reverse and leave the broader market exposed. In plain terms, the headline looks good, but the engine had only a few cylinders running.
Good metaphor. The article mentioned crypto-related momentum as well, with flows into thematic funds and related equities. How big was that factor?
It wasn't the dominant force, but it helped extend risk appetite into the session. Crypto-related momentum can bring in extra demand for growth and speculative names, and in a tape already biased toward growth, that extra demand matters.
Let's go through the notable individual movers quickly. Broadcom, Lam Research, Netflix, Royalty Pharma, Evercore, and the LNG producers like Cheniere. One sentence each. Why they moved.
Broadcom, product announcement that could support higher margin enterprise embedded revenue. Lam Research, rising wafer complexity drove CapEx confidence for chip equipment. Netflix, slipped on a sell the news rotation despite seemingly solid metrics. Royalty Pharma, concerns about payout timing and valuation in the royalty space. Evercore, muted reaction to fourth quarter commentary leading to profit-taking. LNG producers and midstream, direct beneficiaries of tighter physical markets and forward curves.
That covers it. Now, macro. There weren't any surprise prints that shifted the Fed path, but the energy-led move raises the near-term risk to headline inflation. Explain how Fed commentary could react to that.
The Fed has been data-dependent. If commodity-driven moves push headline inflation higher, even temporarily, Fed speakers might tighten their language or sound less tolerant of overshoots. That doesn't mean a permanent change in policy, but markets tend to price in the risk that the Fed will react to transient inflation pressures. So traders will be watching incoming CPI, PCE, retail, manufacturing, and payroll data through that lens.
So the key watch list: inflation prints, Fed commentary, more company catalysts, the energy and commodity forward curves, and especially market breadth. Anything to add for listeners watching the next session?
Yes, keep an eye on whether the leadership broadens beyond megacap tech and energy. If more sectors start participating, that's bullish for the overall market. If leadership tightens further, risk of a pullback increases. Also watch semiconductor equipment names for follow-through, since their CapEx signals can be leading indicators for the tech cycle.
Let's close with 3 quick takeaways for listeners.
1. Markets closed with a narrow risk-on posture. Big cap tech and energy led, small caps lagged. 2. The energy-led rally introduced more near-term inflation and Fed policy risk. 3. Narrow breadth advises caution. Traders will be watching breadth and incoming economic data for confirmation or a reversal.
Perfect. Final note: this is informational only. Analysts note that market conditions change rapidly, and this is not investment advice. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. Catch you next recap.
Thanks, Drew. That's it for today's Alpha Recap. See you next time.